Good morning. This is Shak for the equity check. Looking at the Lanka Hospitals Limited. This is the daily chart over 3 years. Uh, the moving average, what you see is the trend of the 150 moving average. Apart from that, I'm using the MACD to identify the reversals and RSI to gauge the strength. It's going down, which is good for people who are looking for pockets of opportunities to buy. We have seen a great cup in the formation since 24th September 2014 till about here August. That 1 year we have seen a beautiful cup has formed, and then of course over the resistance, the sell-off coming in on profit take, probably people booking profits and making sure that the price drops. Now the good thing is about, since this forms a good reversal point, so I decided to use the Fibonacci tool from this low point towards the next high point, which is over here. That gives us a 50% correction around 55, which confluence with the moving average. So for a technical trader, with the current ongoing situations in the equity markets all across the globe, so I'm looking for a 50% correction to get in around 55 and of course 61. These levels should be the buying opportunities, and to cultivate a bit of patience, to wait. If you have more, you can enter even around this, but then you can buy most of your positions around 55 with keeping a bit more opportunity if the price, keeping a reserve cash if it falls further low. For me, 55 would be a great buy for Lanka Hospitals to hold long term, or 54. So these are the two levels that one should be looking at. I think I have covered Lanka Hospitals. Now I just want to look at one more share, which I think we can have a look a bit here. Let's go to JKH, where I had posted a video. This is the daily chart over 1 year period. Here I'm using the MACD. I haven't included the RSI. Nevertheless, we are seeing a few reactionary levels, support levels being tested and respected. 166 should be excellent opportunity for those who are entering. Yes, there was an opportunity 180 plus to move towards it. It's 185, but what has happened lately is that with the markets reacting very sensitively for the figures that are coming in from China, and then India, kind of a gloomy factor in the next few years, and with overall interest rates to increase by the US Fed in 4 instances in 2016. So that's said. This should not deter investors to buy fundamentally strong shares, companies that have good businesses, good management, constant dividends throughout the year. These plus companies or groups that are maintaining great ROEs, lower debt equity ratios, should be some of the criteria retailers should look when they jump in any bargain. Just because a company that has share prices have let's say halved over a couple of months should not trigger a buy. You should look at other factors, the business that you can understand. So I'm looking at JKH, seeing that recent past the support has held here around 165, so this should not be a bad opportunity if it come across your way. So 166 should be a great, 167 should be as well, 167.50 should be a good buy. That's not to be too cheeky on the support, so one should prefer 166, 167 as good buy levels. So that's said for JKH. Apart from that, there's another share which I'm eyeing. I think I posted a screenshot on KFP as well, Caves Food Products. Will be a good opportunity if one could wait as things span out. 180 and 175 are levels to consider for a buy opportunity. MACD is, let's wait how the sell pressure comes through here. I'd love to see RSI hitting the low threshold here around the 30s, where one should feel more comfortable buying when this crosses the 30 line. Now I would love to have the MACD as it is. That should give us a reversal indication. So most of the shares going through some phase of a correction and a pullback, reflecting the world sentiment in the equity market. Let's have a look on Alum. I haven't put the moving average, so let's jump into another share here. AEL is going flat again. A great opportunity would be around 20s, but if you see then divergences, the big investors seems to still hold on to this, and in my opinion, if the retailers start panicking and selling their small quantities, this might become a very good opportunity as well. And here again, yes, my strategy would be to see RSI hitting the lower band, and of course this MACD to maintain. So technically I'm looking for these indications. AEL would be great, because then I would be hoping to enter further around 20s. That's to do a bit of averaging. Below 20 is something to think about, but I would love to see the share bouncing off between the 90s to 28 levels. So there'll be some trading opportunities should things look positive later on. And that's about the Access Engineering Limited. So I think this is about it. Maybe on another video I'll try to cover some other counters that are very popular in our forum. Until that, this is Shark signing off for the Equity Check.